The TFSA is tax-free, right? Well, it says tax-free only if you don't make these mistakes. And if you are under 30 and just started investing, mistake number 1 is honestly the scariest one. So let me walk through the 6 biggest traps Canadians fall into. Alright, mistake number 1, day trading in your TFSA. So here's the thing, if you are constantly buying and selling stocks, the CRA can actually call it business income and tax you on it. Let me show you how bad this can get. Let's say you turn $10,000 into $20,000 profit. That's normally tax-free in a TFSA, right? But wrong. If CRA decides you are day trading, they tax it as a business income. So that $10,000 profit you made, you are paying full tax on it. And if you are in 30% tax bracket, boom, that's $3,000 gone. Your so-called tax-free account just cost you $3 grand. The solution? Simple, buy and hold long term. Mistake 2, trusting the CRA number on their website. So you log into CRA account and it says you got $10,000 in contribution room available. You think great, I'm good to go, and you deposit it. But here's the problem. That number is weeks old, sometimes even months old. You might have actually over contributed without even knowing it. And guess what? CRA charges you 1% every single month on the extra amount. This literally happens to thousands of Canadians every year. So here's the fix. Track it yourself on your phone and keep your own list. Mistake number 3. This one trips people up all the time. You take money out of TFSA and then try to put it back. So let's say you withdraw $5,000 in March because of an emergency. Then in April you get paid and you think, okay, let me just put the money back in. Big mistake. See, you only get the contribution room back on January 1st of the next year. So putting back in April, you just over contributed. Wait until January. If you're actually learning something useful, go ahead and hit that like button. It really helps out. Alright, let's keep going. Mistake number 4, gambling on risky stocks. Look, if you put $10,000 in some meme stock and it crashes to zero, that contribution room is gone forever. You can't claim the loss of your taxes. You can't get the room back. It just disappeared. So invest smart, don't gamble with it. Alright, mistake number 5. US dividend stocks in your TFSA. So here how this works. Let's say Apple's pay you $100 dividend. The US government takes $15 off that before even you see it. You only receive $85 and there is nothing Canada can do about it. Now US growth stock, those are fine in your TFSA, but those high dividend paying US stocks, better to put in RRSP instead. Mistake number 6, getting your beneficiary setup wrong. So here's the situation. When you die, if your spouse is just listed as a beneficiary, not a successor holder, your TFSA actually closes. The money comes out and it gets taxed. But if you are listed as a successor holder, it just transfer over completely tax-free. It's literally one checkbox difference on the form. So go check your bank forms right now and make sure this setup is correctly. Alright, so those are 6 mistakes. Don't day trade in your TFSA. Don't trust the CRA number. Track yourself. Wait until January before you recontribute any withdrawals. Don't gamble on risky stocks. Be careful with US dividend stocks and fix your beneficiary form. Do all that and your TFSA will actually work the way it's supposed to. And if you like this kind of content useful, make sure to hit like and subscribe and support the channel. Now, if you are completely new to investing, you are wondering where to start, Wealthsimple and Questrade links down in the description. And if you use my referral links, you get a free sign-up bonus as a new investor. It's totally optional, but it does help support the channel if you use it.